All right, so RBC came out with their housing report just a little while ago. So we're going to go over some of the charts that they provided and give a little feedback on what we're seeing in the market as well. So first chart of the day is the gradual, albeit partial home resale recovery in store. Now this is Canada-wide. We will in other videos go a little bit deeper into what's happening in the specific Ontario market, but we want to look as a whole for Canada, how things are looking. So we can see back between mid 2020 all the way to the start of 2022, we can see just how much demand was pulled forward with the home resales in Canada. Now, the yellow dotted line is the pre-pandemic average level of what we saw prior to that. So for many years, and actually every year since and every quarter since the beginning of 2022, we've come in below that pre-pandemic number. But a lot of that has to do with the fact of how much demand was brought forward. I think if you took all this and you added in on all the low years there, it would probably average out into the yellow pre-pandemic average. So there's the forecast that we're seeing. We're still going to be climbing to the upside. I think that is going to be the case as well. We're getting prices down. Prices are likely to start coming down a little bit further as well. We're still bringing new Canadians into the country, albeit the numbers are lower, but there's still going to be relative strength there. So I do suspect that we are going to get stronger sales. I just don't think we're going to see stronger sale prices on top of that. Now, in specific parts of Canada, yes, their prices didn't get carried away like they did in certain parts of the GTA. So depending on where you are now, if I'm just speaking for the York region area or for the GTA, I think that sales will start to climb from here, but don't expect prices to accelerate to the high side until later on. And this brings us into the second chart, is the home price is expected to dip. So as we can see the forecast, we are looking for the remainder of 25 to dip out, to start to bottom out at the beginning of 2026, and then start to move its way to the upside. Now, some of this has to do with the fact that 60% of all mortgages are coming up for renewal from now until the end of 2026. So interest rates are still relatively high. Depending on who you speak with or what data points you're looking at, the data points that I'm looking at is telling me higher for longer. We could get another 25 basis point cut in September or December, but 2026 is looking very flat right now. Now, anything can happen. A world event could happen. An event in Canada could happen, and this could drive them to cut interest rates right away. But as of today, you would only be speculating if this happened or that happened for interest rates to get cut. As of the world today, it's looking like maybe one more cut next year. Nothing really in the market as of right now. So let's jump into with resale slumping below trend since the Bank of Canada hiked rates. Again, there's that big demand that was pulled forward during 2020 to the beginning of 2022. And we've seen that effect happen for a number of resale transactions below. So we should start to see this pick up as we finish out the year. We had a strong end to last year, let's not forget, before the trade war happened. So there's definitely a chance that come September, October, November, we're starting to see an acceleration in the sales side. When we're looking at pent-up demand, this is accumulated surplus or deficit relative to trend number of transactions. So we're starting to see the cumulative resales since 2015 now undershoot what they would be had the pre-pandemic trend prevailed. So we're starting to see there is built up demand coming on the market here. It's just the confidence that's in the market right now. Am I still going to have a job? What kind of tariffs are going to come down? We haven't reached an agreement yet. So the average buyer out there is just sitting on the side. They're seeing prices continue to come down as well. They're seeing that weakness, but it will get to a point where the news is going to start to shift positive. I do think that we are in a recession. We have been in a recession for a little while. Does it get significantly worse? I don't think it will. I think the US is extremely strong right now. that bodes extremely well for Canadian businesses because most of our trade has to do in the United States of America. 80% of all the trade between our two countries is protected from the tariffs as well. So there are pockets that are going to be affected: the automotive, steel, aluminum, forestry, stuff like that. So yes, different pockets, different communities might see some of that effect. But overall, again, 85% of the trade that we do between countries is protected from tariffs for now. Jumping into the next chart, the slack in the labor market to decrease progressively in 2026. So the unemployment rate in Canada as a percentage. So most forecasts that I'm looking at is between 7% and 7.5% for the unemployment rate. So RBC is forecasting that we are going to peak out later this year on job losses and then start to go to the downside. So we should see more people jumping back into the labor market. Now, one big thing that's going to have to happen is you're going to need to see some more real estate get built, because real estate really provides a lot of jobs in our economy. Definitely going to need to see some of that pick up, and we're going to need businesses to also have the confidence start adding to their labor force. And if you've seen some of our other videos, when we look at the business surveys, they are starting to get confidence in there. Okay, the feedback that's coming in is saying that they're not worried about the pandemic anymore. The tariffs anymore. They're not worried about Donald Trump as much as they were earlier in this year. So they are starting to see the strength show up in the data, some of the underlying data that hasn't shown up in some other data points that a lot of people use. Now let's look at interest rates are lower but no longer declining in Canada. So what RBC is saying here, okay, the largest bank in Canada, is that is done cutting rates as of right now, and that is in the yellow line. If we look at the blue line, this is your fixed rates. They're starting to see an acceleration to the upside in the fixed rate market. So this is very interesting. People have to understand that if you're looking to buy a property, odds of more variable rate interest rate cuts are potentially not on the table right now. I still think it is possible to get a 25% cut before the end of the year. It'll probably largely have to do with what the United States does with their interest rate. But when we look at the fixed rates, RBC, this is the cheapest fixed rates are going to be until the end of 2026, as that's where, as far as their forecast is going to go. So if you're hoping for cheaper variables or cheaper fixed, as of right now, doesn't look like it's coming. Affordable issues will still persist despite the easing. Ownership cost as a percentage of household income, the Canada composite of all housing categories. So we can see that even with the softening in the price, the softening in the demand, we're still going to be historically high when it comes to affordability. A ton of people out there calling that things need to come all the way down. This change needs to happen, but also people have to understand that pre-pandemic construction costs to we see now are incredibly different. They're up almost 75 to 100% depending on the area. So the amount that the labor costs, the taxes that are put on by local municipalities, the everything that goes into that building of a property is significantly more expensive than it was before. So there's only so much that you can come down on price point because of that. Let's look at the immigration. So immigration shifts that are happening, the annual percent change in Canada's population. We can see that 23 and 24 were big in Canada's population. Now for 2025, we're still going to see an increase. It's going to be less than 1%. In 2026, we're going to see a smaller increases. But at the same time, we're not going negative. We're still bringing more people into the country. And ultimately, we're seeing the demand in the rental market. We're seeing an extremely tight rental market, even though prices for rents are coming down. We're seeing a tightness there because everyone that can't afford to get into the housing market or doesn't have the confidence to get in the housing market are rotating into the rental market. Once they start to see that confidence, they will start to rotate back in and buy properties.